How's everybody doing? We're going to be going over market maker models today, but I wanted to throw this in first. If you wanted to ever message me or join the community, I have a Discord, right? Everything's free here, right? You see, got on the announcements and the analysis, start a top step for the Discord, right? First day was pretty good, right? I go over almost all the trades I take, small stuff, here and there. Uh, right, we had NFP Friday, went over all the trades for NFP Friday live while they were happening. Um, right, sending stuff, as soon as I can to get everybody in. Right, we had a swing going into Thursday. Right, just wanted to put this in here quick for anybody that would like to join. Right, it's like I said, free. You don't have to pay anything, and you can answer any questions. We have a questions tab down here. Just send in a question. I'll answer it for you. Maybe make a home video out of it. But yeah, thank you. Now for what you came for today. Right? Market maker model simplified. We're going to be going over the buy model, sell model, as well as everything in between. We're going to be looking at our MMXM framework, and obviously this just stands for market maker buy or sell model. Okay? Going to be going over our time frame alignment. We want to be looking in weekly PD arrays for a 4-hour market maker model, daily PD arrays, an hourly market maker model, or 4-hour PD arrays, the minute 15 PD or market maker models, right? We can go down to the hour or 15-minute PD arrays and have a lower time frame market maker model, 5-minute or 1-minute. Same with the 15-minute down to a 5-minute or 1-minute market maker model. What we do with the market maker models is we anticipate a move down or up. We anticipate the reversal, confirm the reversal, then we enter to finish off our market maker model. For a solid market maker model, we want at least 2 legs of accumulation to confirm it. We would also like to see an SMT at a key reversal area, which will allow price not to take a low and confirm the reversal. We see here the original accumulation of our sell model, a second leg of accumulation for our sell model into our smart money reversal, followed by failure swings into our first accumulation leg of the sell side of our curve into the second accumulation leg of our curve, where we sweep the highs and return to the sell side level of our original accumulation. Here we have a buy model, accumulation, accumulation. You have your smart money reversal listed here, a discount array, right? We have a high time frame PD array that we want to be seeing the smart money reversal react and then confirm our entry. Okay. First leg, accumulation of the buy side of the curve. Second leg, sweep the lows and take out our highs of our market maker model. We want to keep all of our variables noted when we're back testing and taking a look at our models. We want to keep in mind what date it is, what time it is, right? What day of the week, what week of the day, what week of the month. What type of market maker model is it? Where can we find our entry? When did the original accumulation form? And when did the original consolidation form? And also, where did the original consolidation form? We want to go over when did the smart money reversal form, as well as where did the smart money reversal form. Was there an unfilled gap, right, from our smart money reversal or into our smart money reversal? Was there any SMT, and what type of SMT was it? Alrighty, so hopping straight to the chart, we can see here, right, we have a completed buy model, right, showing our accumulation ranges, right, and you can either see this as a large accumulation, two smaller accumulations, right, just with chart time and seeing these market maker models, seeing your accumulation ranges will make a lot more sense, because sometimes they can, be in a pattern, or not a pattern, but just look like this, right? Forming low resistance liquidity, and we still see it as an accumulation, right? So we have a weekly PD array above this high, which we reacted to, wicked in, came back, closed within our range, right? Range high to range low, right? And then we dug a bit deeper into our fair value gap here. All right, so after that, we pushed up, closed within this fair value gap, and then continued to range, creating another accumulation leg. All right, so with our weekly PD array up here, we're on the 4-hour time frame. Okay, we see an original accumulation leg, which was also our smart money reversal down here. Okay, and then you can also maybe see this, or even, this as an accumulation range, right? Just depends what time frame you're on and what you're looking at, right? With us being on the 4-hour, this isn't a complete full accumulation range because we're still moving below old lows and even old lows down here, right? We're responding from the daily order block bullishly, creating a CSID, creating a CSID, creating an order block, right? We retrace to the order block and then continue and deliver to our weekly PD array. So now with that, we have now created a breaker lower, responding from our weekly PD array. So what would we like to see? Right, we'd like to see either this fair value gap, right, react us, create us lower because we've already responded to the order block, right? Or we'd like to see a run on these sell stops, dig in to the order block one more time, and continue us lower. Okay, so we chop around, right? Sweep this candle low, right? Close within. So we most likely will see the high being ran. High has now been wicked into and ran. Close within our candle, and then we break lower. Right, so we can move our whole accumulation range. See that we've now swept the range high, right? Reacted to the daily order block after sweeping buy side liquidity, running buy stops. So now we leave an obvious fair value gap. I meant to delete that, whatever. But we leave an obvious daily fair value gap, right? After breaking the accumulation lows, right? So we're gonna continue lower. And we see we have formed another accumulation range. Maybe SMT at the highs, and or you can see how we responded to this order block, right? And maybe SMT into the fair value gap, right, for a Model 2. We now sweep the lows, right, with the daily BPR sitting below. Or, sorry, these equal lows sitting below, right, from this accumulation leg, right? We sweep the lows, and we see we formed an accumulation leg here. We swept into the lows and instantly reacted bullish, creating an order block, right, and a rejection block candle. See within the same candle, we react to our rejection block on the 4-hour, right, after the 9 a.m. candle, or the 10 a.m., whatever. So now, once we see these highs broken of the accumulation leg, right, after either accumulating or just continuing higher, we'll know that this accumulation leg is formed, right? We sweep the lows into a PDA that has not been mitigated with our rejection block. And right, see we reacted from it here, but we come down one more time, close within the wick, maybe SMT at the lows, right? Generated liquidity for the buy side. Inversion, whatever you want to call it, right? I don't care about that because we saw what PDA I was waiting for us to react to, right? Come into the fair value gap here, fair value gap order block, right? And now you see how we have created another accumulation leg, right? Broken higher, but closed within. So now we're going to break this accumulation leg, right? To finish off our market maker model with this accumulation leg. And why do we not go and take this high, you may ask? Right? We're already delivering from a weekly PD array. Right? We're generating liquidity to the downside. Right? Sweep equal lows. We didn't displace relatively harder lower. Right? We closed on the 4-hour with the rejection block candle. Right? And then creating a CSID. So we know that we're going to move higher. Correct? Right? Create a breaker higher time frame. Come down, order block. Right? Rejection block. Come into our fair value gap order block. Right? Create another small accumulation range above the old high with even another small accumulation range. Right? And we come into the daily fair value gap. Right? Wick in, close within at our 10 a.m. candle. Right? Is that coincidence right there? Wednesday, 10 a.m. candle. Thursday, 10 a.m. candle. If you made it to this part of the video, mark that. It's a very key point of our 10 a.m. 4-hour candles, right? With our open, high, low, close, right? And then forming a rejection block into a time-based liquidity level with this 4-hour candle. Then reacting higher for a great turtle soup. Oops. So now you see we formed our smart money reversal. Formed another accumulation leg, right? And then once we break the low of this accumulation leg, right, we've delivered from a weekly PD array, formed an order block and with a daily fair value gap, broken lower, right? Generated more sell side liquidity because we did not displace with aggression into this sell side level, right? This is displacement and aggression on a lower time frame, right? Lower time frame market structure shift, even higher time frame, you know, the 4-hour, right? But into a weekly PD array, right? So we continue higher back to our excuse me, we continue higher to our trace back to our daily fair value gap order block, right? And start to accumulate again, right? We then break lower with a thick black candle, start to accumulate and come back into our range. We see we're at our 10 a.m. candle. And see why I said that was so important is we could have either swept this buy side level, right? Swept this one candle into this rejection block candle, right? And I know people are like, oh, you need the rejection block to be the extremes, but right, of this accumulation range, that's what this candle is, right? Going into our 10 a.m., right? 10 a.m., close within. Then we continue lower. So you can also see our larger time frame accumulation range. We're accumulating below. You can either say the original accumulations, right, or the accumulation before the smart money reversal. We break lower, right, come back into our breaker, fair value gap. Or not fair value gap here, but whatever. Right, to continue lower. Okay, and like we said a million times over, we want to see a strong displacement, right, into an obvious fair value gap, For a good turtle soup, right? We have this obvious fair value gap. We have this obvious fair value gap. All right. Which one do you think we should dig into? Right? We have this one. Right? We have this small low resistance liquidity into another obvious fair value gap. Well, if you're saying go to a higher time frame, great answer. So we look, we see that we have one daily fair value gap and then a volume imbalance with another small fair value gap. Right? More equal lows generated liquidity and a long wick candle on the daily like this. All right. With me being on replay, right, it doesn't matter what I say because, you can just say I've looked back at it. But I want to see us displace even lower, right? We're so close to these lows. We're going to want to displace a little bit lower before wanting to fully reverse, right? We see this obvious fair value gap here, right? With two equal highs. Now we displace lower, right? Past our fair value gap into our obvious fair value gap, right? Leaving fair value gaps. 1, 2, 3 candle, right? 1, 2, 3 candle, right? Daily rejection block is formed on a Thursday of the week, right? So where does our smart money reversal form? Right, the Thursday of the week. So we have an accumulation line. You can either put it here, right? Or you can put it here, right? Whatever floats your boat. Whatever you want to do, right? Because if I tell you to do it exactly right, you might not be able to see it that exact one way. But if you're able just to see it, you can make do, right? And this is just the basics. So obviously I'll go into more in depth with time-based market maker models, even down to the 1 minute and 5 minute. But if you can't see a 4-hour market maker model from weekly PD arrays, right? From a weekly breaker, right? Weekly breaker, right? We have this weekly breaker and this fair value gap below, right? This is going to be a breakaway because of this breaker, right? And even this inverse VI, we have 3 PD arrays stopping us from getting here, okay? So let the chart go by a little bit. Notice how I said this low was protected. Form another accumulation, right? Maybe SMT into this INWOG. And we just burst higher. Why do we respond so aggressively? Swing high, swing low. Oops. Swing high, swing low. We're right at EQ of our larger time frame range, right? We go into even our shorter time frame range, right? Go to this candle, into this previous swing low that's not protected, right? We can either use this. I don't want to use this one, right? Because there's no obvious black candle, right? As a prominent swing low, right? This swing low right here is pretty obvious. Okay. So let's go back. And we see how we have our accumulation range. Even accumulation range here. into our smart money reversal, into our high time frame PD array, right? With now, we've gone from weekly PD array, created daily, back to responding to that, down to our weekly, right? Breakers create breakers create breakaway gaps. Okay. And we continue higher to finish out our market maker model, right? And no, not this high, our original accumulation high, right? And see what we do with the obvious PD array, right? See, we create a range, sweep the range, breakers breakers leave, good lord, breakers leave breakaway gaps. I'm so sorry, terribly sorry, right? And then even might go out to finish this accumulation high, all right? Alrighty, and I know I didn't get into lower time frame market maker models, right? But this is just market maker model simplified. Whenever the buy model and the sell model, right? How buy models turn into sell models, how sell models turn into buy models, right? Where you can find an entry in between, right? After we start to accumulate, even a second leg accumulation, right? And sweep the accumulation high into a daily PD array, right? Or a higher time frame PD array than the market maker that you're looking for is on. So right, if we're on a 15-minute time frame, we have a 4-hour PD array. Okay. We saw how we could anticipate the moves down then up to anticipate a reversal, then confirm the reversal. I didn't really go over entries, but I showed where, right, our highs and lows were protected after we created them, right? And then when we would finish the market maker model, we showed all the accumulation legs of our confirmed market maker models and where and how to look for them, right? We showed where SMTs needed to occur for it to be a key area for a reversal. You see, I wasn't saying SMT at this high, SMT at this low, right? We were looking for SMT into our key high time frame PD arrays, right? We saw the buy side and the sell side of our curve, as well as our variables that we want to keep noted. We saw date and time, the market maker model type, when was our entry, when did the original consolidation form, and where was the original consolidation formed at, as well as when and where did the smart money reversal form, right? We saw Thursdays and Wednesdays being high and lows of the weeks very often. Okay, we saw, was there an unfilled gap and where did we want to retrace to, then continue to, right? As well as what SMT and if there was an SMT. All right, get into it deeper here in the next episode, but I just wanted to make sure that everybody has a basic understanding of the market maker models, what they are, and how to look for them. Because, right, if you can't even see, right, a 4-hour market maker model from a weekly PD array, you're never going to be able to see a 5-minute or 1-minute market maker model on a 15 or even an hourly PD array. Okay? I hope everybody enjoyed, maybe learned a thing or two, and I'll see y'all next time. Y'all have a great one.